So guys, for the past few days, I've been using a strategy, right, that I'm going to show you guys in this video. So as you can see over here, right, that this is actually a screenshot that I took while I'm using the strategy, okay? So in this video, I'll be breaking down this strategy for you guys easily, okay? Now make sure to watch this video until the end if you don't want to miss any of this strategy, because it's very important if you want to master this strategy, okay? So let's get started. Okay, so when you look closer, you can actually see that at the top over here, right? This is where I took all of my entries, right? Now, when I remove this and I move the screen to this side, right? You can see this is boom 1000 on the 1 minute time frame. And you can see the strategy that I've been using, right? Now, this is a very, very excellent and easy strategy that you can use to your advantage. The only thing you have to do is make sure to like this video and also join my free Telegram group, okay? So I'm gonna show you guys the parameters and all of the stuff that you need to make this strategy incredibly good and make money from it. Okay, so currently we're on the charts, right? And the first thing we're gonna do is, remember when I show you guys strategies, I always start off at the 1 hour time frame. And why am I doing this is because, check this out, we want to check the trend of the market, right? And as you can see over here, the market has been trending in an uptrend for the past few days, right? So check this out, right? Look at that. So when we zoom in, we can actually see that this is where the market decided to break out, right? Okay, over here the market decided to break out, and then it came back to retest this trend line over here, and then it went up in a uptrend, right? But the thing is this, the reason why you should always look at the 1 hour time frame to check in which direction the market is going is because if you don't do this right, you won't know what to expect. Or let's say, for example, you're in the 1 minute time frame, okay, and you looking for selling opportunities, but then the market decides to go in an uptrend on the 1 minute time frame. The reason why this is happening is because if you had done your analysis on the 1 hour time frame first, you would have saw that the market was swinging in an uptrend. So the only thing you had to do was only look for buying opportunities, right? So over here, this is where we saw the market price decides to break above this trend line, right? So check this out. But the thing is this, sometimes price is going to do this, right? So for example, we will think that this is a selling opportunity over here, right? Check this out, because we see a break below this trend line, and then what it does is it goes up, right? So you need to be cautious of this, right? You always need to make sure on the 1 hour time frame that you draw your trend line correctly, okay? Because that is very important. And if you do this properly, you will be able to master any strategy you use, right? So let's go to the 1 minute time frame and add the indicators that we need for the strategy. Now let me just remove all of this stuff, right? Last one. Now let's just go to the 1 minute time frame, and I'm going to remove everything that I've drawn on this chart, right? So we're on crash 1000 at the moment, and the first thing we're going to do is we are going to add our stochastic oscillator. Right, now make sure its parameters are like this. The K period should be 1, D period 1, sloping 1, price field low or high, method simple, styles main 2 pixel, green, signal 2 pixel, white. Okay, so this is how it's gonna look like. You will have nothing inside of your stochastic, right? Nothing. Okay, you will have nothing. Okay, guys, you won't have anything inside of your stochastic, right? The next thing I'm gonna do is you're gonna click on main chart, right, over here, okay, and add your stochastic oscillator again. Right now, this is just the parameters I'm going to show you guys for the second time. K period 1, D period 1, slowing 1, price low or high, method simple, styles main pixel 2 pixel green, signal 2 pixel white. Right, so we have two stochastics, right? You can see we have two stochastic, 1, 2, right? So once we have two stochastic oscillators on our chart, the next thing we're going to do is we're gonna add our first indicator. Right now, our first indicator that we're gonna use for the strategy is the envelopes indicator. Right now, make sure that your parameters are like this. The period should be 3, sub 0, deviation 0.100. Method simple. Apply to close. Upper band 2 pixel blue, lower band 2 pixel red. Okay, so we on Crash 1000. The first thing we're gonna do is we're gonna check if we can use this indicator on its own. Right now, it's very easy to use indicator on its own. For example, you guys can see every time when the envelope touches this level over here, the 10.5 level, it goes up. Right now, you can just use this on its own, but remember what I told you guys in the previous video. The more confirmations we have, the better it is for us to take trades, right? So if you have a lot of confirmations on the chart, you can actually make a lot more money, right? So over here, we can see that the envelopes likes to repaint. So just look over here, right? You guys can see over here, okay? Now let me just drag the screen. Look at what the envelopes does, right? I'm just gonna draw a horizontal line. Look at what the envelopes does over there. Now let me just remove this. The envelope is moving, but if we go on this side, we can see the envelope doesn't move. All right, so now it's moving. Okay, so you need to be cautious of that, because at the end of the day, the indicators that I'm showing you guys, some repaint, some don't. Okay, like the RSI doesn't repaint. So check this out. The envelopes is over here, right, at a 10 level. What we can see is the market decided to go up. So we could have taken the entry, right? Most people, if they had saw this, they would have taken the entry over here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles, then got out of the market. But the thing is this, what if you take an entry and you don't know the trend of the market? What's going to happen to your account? You are going to blame your account. So the first thing you want to do is, right, you want to check the trend of the market. Okay, now, as I've told you guys previously, sometimes the market is going to look like it comes in a downtrend and then goes in an uptrend. Okay, so you need to be cautious of that, right? So check this out. This is where the market decided to break out of, right over here. Okay, let me just remove that. This is where the market decided to break out of, right? So if you had entered over here, right, so let's say you see this, okay, you see the breakout, then you have to wait until price breaks above this level before looking for entries, because this is where the market decided to break out, retest, then went up. Okay, so you need to be cautious of that as well. Don't just trade the markets blindly and end up blowing your account. So we can see that the market is still going in an uptrend, and when we scale down to the 1 minute time frame, right, okay, sorry, let me just go back to the 1 hour time frame and draw a vertical line to see where the market decided to go up in the uptrend, right? Where's the vertical line now? Okay, see, here it is, right? So as you guys can see, before the vertical line, we could have already saw that there was an entry, right? You make sure that the chart is zoomed out completely. Drag the screen to the left and right, and as soon as it touches your envelopes, touches the 19 and 5, 10 and 5 level, we take a buy, right? So over here we can see the envelopes decided to touch the 10 and 5 level. We take a buy. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles. Easy, right? But the thing is this, once you trade with indicators, it's better to have a lot of indicators on the chart. Now, I don't mean like you should have like 20 indicators, right? I mean like 2 to 3, you know what I'm saying? So you can have like 1 to 3 indicators on the chart to use extra confirmation, plus using support and resistance and trend lines as extra confirmation as well, right? Now this will actually help you a lot, right? Now as you guys can see, the stochastic over here is empty at the moment, right? So we're gonna add an indicator. Now the indicator that we're gonna need for this is our MACD, right? Now click on indicator window 2, right? This is where you're supposed to click to all my beginner traders, right? Because if you click on this over here, right, now let's just say for example you're a beginner trader, you click on main chart, click MACD, what's gonna happen? It's gonna look like this. Now you don't want this on the chart, right? You don't want the stochastic to be open and the MACD to be over here. right? So let me just remove that, the MACD. Just gonna remove the MACD. So you want to click over here, okay, indicator window 2, click on the MACD, and this is how it's gonna look like. You want it to look like this, right? So as you guys can see, we have envelopes, and now we have a MACD. And if you go to the 1 hour time frame, we already saw that this is where the breakout had happened, right? Now the thing you're gonna do is, once you see the breakout, now once you know that the market is going in the uptrend, the next thing you're gonna do is you're gonna wait for your entry patiently, right? Do not be in a hurry, because remember, the market always comes back to where it was, right? So over here we can see the first thing you do is you zoom out your chart completely. Do not ask me about any zoom level in the comment section, because I won't respond, because you don't need any zoom level for this strategy, right? So over here, the envelopes decides to touch the 10 level, the MACD decides to touch the 10 level. We zoom in, sorry, we zoom out, we drag the screen to the left and right. We can see that the MACD and envelopes doesn't move. We zoom in, we can actually see we could have taken an entry. First confirmation, second confirmation, 1, 2, 3, 4, 5, 6, 7 candles. We're out of the market. What we're gonna do next is we're gonna do the same thing, right? Right now, you want to make sure that the envelopes and the MACD touches the 10 and 5 level when the trade crash 1000. So for example, we can see that envelopes touches the 10 and 5 level, goes up. MACD touches the 10 and 5 level, goes up, right? You take your entry, right? Now, if the envelopes doesn't touch the 10 and 5 level, you do not take a trade. If the MACD doesn't touch the 10 and 5 level, you do not take a trade, because at the end of the day, you will blow your account, right? So check this out. This is where the envelopes touch the 10 and 5. This is where the MACD touches the 10 and 5 level. You take a trade, right? Now, you also need to use proper risk management. Now, let me just make this an example, okay? So if you have an account of $100, right? Let's say you have an account of $100. You are going to risk $1 per trade, right? You're going to risk $1 per trade. And when it comes to reward, okay, you are going to look at a reward of, like, let me just write this down. Reward, okay, a reward of $3 or more, right? Now, the reason why I'm telling you guys this is because if you do it like this can actually help you stay in the forex market for a longer period of time. Remember, if you trade, it's not about perfection. It's not about being the best trader in the game. It's all about being consistent and stay in the game for a long time. Because if you are a trader, you want to be able to do this for the rest of your life. If you don't want to do this for the rest of your life, then do not trade forex, because you are just wasting your time, right? And you're also wasting your time while watching this video. Okay, so you can see we're on boom 1000 at the moment, and the first thing we're going to do is, when we're on boom 1000, we're going to go to the 1 hour time frame, okay, and see in which direction the market is going. So over here we can actually see we could have drawn a trend line, right? So check this out. Look at the trend line. And what the market did was, it decided to go in a small downtrend for a little bit, like this over here, okay? We can see, let me just zoom in. This is where the market decided to break out over, right? You guys can see, this is where the market decided to break out over. And what we can see after that, the market decided to go up again, right? And the reason why the market went up again is because when we draw a trend line from this point, right over here, we can actually saw what happened. The market decided to break above this trend line again and then went up, right? So you always need to have your trend lines in order to check in which direction this market is going, right? So when we go to the 1 minute time frame, let me just add my vertical line to see where it broke off, right? Okay, so let's just go to the vertical line. Okay, so this is where price decided to break out of on the 1 hour time frame, okay? And you guys can see over here, before the break, we can actually see that the envelopes in MACD was at the 1995 level, and we could have taken the easy entry. Even though the small spike occurred, right? We could have taken an entry, easy entry. Right now, this is how you use the strategy. It's actually very, very easy. But the thing is now, let me just go to the side so you guys something, okay? We can see that the market is going in an uptrend. So what the indicator is going to do right now is going to do this. You're going to think that the indicators is stuck at the 1995 level. That's why I'm telling you guys to always drag the screen to the left and right so you can have a better understanding and see if it really is stuck. If it moves, okay, you are not going to take your entry, right? Like this, for example, check this out. A lot of people would have been caught out over here because they were thinking that the envelopes is stuck at the 90 and 95 level in the MACD as well, right? So you guys can see the MACD looks like it's at the 1995 level, but look what happened after that. It decides to go down, right? So you need to be cautious of that as well, right? So over here we can see that the MACD and envelopes is at the 1995 level. But the thing is this, you do not trade at this moment, right? Why am I saying you're not supposed to trade? Is because we can see on the 1 hour time frame that the market decided to go in an uptrend, right? Now in Boom 1000, when the market goes in an uptrend, you do not want to take your entry, right? Because at the end of the day, you will blow your account, right? If you are looking for scalping opportunities. So if you are trading Boom 1000 and the market decides to go in an uptrend, I'm going to apply a spike strategy. Right now, I've dropped a few spike strategies on my channel. You can go and check those out, right? So, guys, this is how you use this easy strategy. So from now on, make sure to first check the trend of the market, right? When the trend crash in Boom 1000. And after that, you scale down to the 1 minute time frame. You check the indicators. If both give you confirmation, you take your entry, right? So thank you for watching this video. Don't forget to join my free WhatsApp group, my Telegram group, and also make sure to subscribe to the channel and smash the like button if you find any value in this video. Thank you.